Although dividend stocks have the most promising reputation among the stocks in the market, it actually has a few of its own flaws that investors must not overlook. Such flaws may or may not affect the advantages that it brings, depending on an individual's investing goals and such. Nonetheless, in this video, we're going to put aside all the good things you've learned about dividend stocks so far, as we unpack the important cons and disadvantages that it has, which every investor should consider before deciding to invest. Dividend stocks have several good things about it, which makes it ideal for beginner investors who are probably not yet comfortable with taking risks as of yet. However, long-term investing is actually more ideal for investors who are nearing retirement. Despite that, it wouldn't hurt to take precautions and invest in dividend stocks for safety before you decide to go investing in other stocks for your investment portfolio. So here are a few issues that every investor must take note of regarding dividend stocks, which are essential to making a decision on what's best for your portfolio. Hey, welcome to Stock Market Mate. Today we'll talk about the problem with stock investing. Before we get into it, subscribe to the channel and hit that notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. To begin, let's briefly discuss the background and pros of dividend stocks. Dividend stocks are profits from dividend-paying companies. These companies are usually large and have already thrived in the business world. For example, Apple Incorporated, Amazon, etc. Since these companies are already big, they generate huge amounts of profits, hence when they find that they have good extra millions lying around, they'll use that money to pay its shareholders or investors. The payment is called a dividend. Not all companies pay dividends, by the way. As a matter of fact, some flourishing companies have cut off their dividends. This is very important as it has the potential to be risky for investors that plan to invest in dividend stocks. Before we proceed to discuss the disadvantages that dividend stocks hold, we're going to mention a few of the good parts, or their advantages. Such as that, dividend stocks are usually stable, which means a sudden market crash won't have a tremendous effect on them. You'll also receive regular income through dividend stocks, and all you have to do is buy shares and own them for a very long time. So now that you've heard the good stuff, let's discuss the not-so-good ones, shall we? The cons of dividend stocks. Now let's go through the disadvantages that dividend stocks have that you need to take note of. We've gathered about 5 of them, which we guarantee can make you think harder on whether you should invest in dividend stocks or not. Number 1. There's no other real benefits to look forward to. Yes, we mentioned several advantages, but really, other than the fact that it helps you feel more secure, it doesn't really offer much benefits other than the emotional advantage that you'll feel safe with your investments, or at least safer, if not completely safe. This doesn't really count as a real advantage over the regular index. However, this of course can just depend on the investor. It all goes down to individual preferences after all. If you think that feeling secure about your money greatly helps you as an investor, then all this won't really matter. Number 2. You are not able to diversify as much. Investing in dividend stocks means investing long-term. The only place you're going to put your money is with large established companies, meaning you'll be missing out on smaller companies but with big potential to become huge and thriving. Because these small companies won't be paying dividends, you'll less likely want to invest in them because they won't be able to provide you with regular income. However, you can choose to diversify if you want. It really just depends on your preference and whether or not you're ready for the risks that you're going to take. If you take one route instead of the other, or do both routes to broaden your experience, then great. If you want to invest in, say, growth stocks as well as dividend stocks, then you certainly can. There's actually no rule that you can only choose one. However, there is the possibility that as you begin to invest in these big companies, you'll feel it's harder to invest in other types of stock, lest you lose money as a result, or that you're already too comfortable with a safe way. It's better for your portfolio to diversify, so just keep that in mind. Number 3. Dividends come with a price. Dividends are not free and you're going to be taxed. Receiving dividends means the stock price will fall by the same amount as the dividend distributed to shareholders. If you think about it, you're really just going to be moving money around. What's worse is when you transfer this money, you're getting taxed. Number 4. Dividends can limit a company's growth. Dividends are likely to limit a company's growth and earnings potential. If a company is paying dividends to its shareholders, this usually means they have a ton of money that they don't know how to make use of. They ran out of creative ideas and how to continuously develop their business. So they turn this extra money that they have into a salary for the stockholders. This would mean that the stocks cannot grow in price as fast as the other stocks, which are still innovating and growing. However, that does not mean that these dividend-paying companies that have already grown will stop growing altogether. They will still make a ton of money, however, they won't be growing at a double-digit rate compared to the smaller companies. Because these huge companies have made so much money, they sort of reward their investors with increasing dividends. Number 5. Payments are not as guaranteed as you think. As we said before, it's important to take note that some companies can cut off their dividends, and some companies don't pay dividends at all, which we already know those are the smaller companies with businesses that are yet to grow. But the major drawback is that the big companies that do provide dividends can just cut them whenever they want and see fit. In fact, recently, many companies have cut their dividends. One example is the Walt Disney Company, which cut their dividends way back in 2020 during the pandemic. Hence, if you're not an investor that's possibly nearing your retirement and relying on dividend income to profit, it would be very unfortunate for you when you won't be getting paid at all when a company suddenly cuts their dividend. A summary of everything. Dividend stocks do have drawbacks. It's the same with other stocks. Although it's much safer and more stable, depending on the individual or investor, it might not be that ideal. Which is why it's important to take a closer look at its weakness just as much as it's important to look at its strength. Don't take this as a discouragement, however, but a lesson to keep in mind so that you'll be able to learn more about what you should do for your investment goals and how you can achieve a great portfolio for yourself as an investor. If you're a beginner, constantly try to learn more about the other types of stocks as well. Consider the pros and cons and weigh them according to your own plans and preferences. It's completely normal to feel like something is too risky to your liking. That just means you have your own risk tolerance, which you should very much consider whenever you're planning your investments. All in all, the purpose of this video is really just to show you things you need to consider in order to know what decision is best. Dividend investing is actually not that bad. There are a few issues to note and ponder upon, but as long as you know what's best for your portfolio, you're good. If you want to learn more about dividend stock investing, or if you're thinking about investing in dividend stock, we encourage you to research as much as you can. You can also consult with an analyst if you like that deals with stock research or selecting stocks for your benefit. The issues that we pointed out here are just some of the problems in dividend stock investing that we find interesting to closely examine. There are probably some more that we weren't able to mention in this video. If you think we missed something, feel free to comment down below and let us know. And that's about it for today. If you found this video helpful, kindly click the like and subscribe button. Also, you might also want to leave your thoughts down in the comment section below. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!